Hey everyone, RJ Weiss here from Gen Y Wealth. Welcome to this video, first one of 2010. Hopefully a lot to follow. Alright, I want to do a quick little story of why you should not be investing, which is kind of contrary to what I usually say, but hear me out here. Alright, I was helping a 19, 20-year-old kid invest recently, and he was lucky enough to have his college paid for. He's got a job, he's got money coming in, and things are going well. So he said, "Hey, look, RJ, I want to start investing. Where do I start?" And I told him, "All right, let's look over. You don't have a 401k to invest in, so next place we'll go is a Roth IRA." So I told him all the advantages of a Roth IRA, and that the money grows until you're 59 and a half, and you get to withdraw it tax free, and with compound interest over 40 years since he's so young, that could really turn into something special. So we did a couple compound interest calculations, and he saw like, well, I could easily have 3-4 million in 60 years. So of course that got him excited. So he quickly maxed out his Roth IRA, which is very good when you're that young. So now he wanted to know where to go next, and I told him not to invest next. He's 19 years old. He has a lot of things coming up in life that he might need that money for. So say he doesn't really have a specific purpose for that money, and without a specific purpose, you should not be investing in stocks. So if you don't have that goal of, say, buying a house in 10 years or buying a car, you should not be investing in stocks. Okay. So I say at minimum, your goal should be at least 5 years away to invest in stocks. And anything less than 5 years, you could look into, a short-term bond mutual fund, and anything less than 2 years should really be in savings account as a general rule of thumb. So, but I just told him, you might need that cash someday. And cash, even though it's earning just 1-2% a year in savings accounts nowadays, is not the worst thing to have in the world. It gives you lots of freedom. Sometimes personal finance isn't all about, getting every last cent out of your investments to where, you maximize it. It's more about having the freedom to do what you want. And, if he didn't have a specific goal, then he had no reason to invest. And, say he started investing and then all of a sudden 2 years away, he didn't see an opportunity to travel abroad and he needed to sell $5,000 of investments. But say the next 2 years in the stock market, it goes down, 25% each year. He's in a lot of trouble. He lost a lot of money because now he needs that money. He needs to sell those stocks, and he really depleted his, his cash there because he put 10,000 in, and now he only has 5,000. So, and now he has to sell. That could do a lot of harm to his future. That's a lot of money at a young age. So, without a specific purpose, this is the point I want to get across, is you should not be investing.